Let's do a quick technical analysis of Bitcoin and the entire crypto ecosystem. Just look at how the price of Bitcoin after what we could call a black swan event right here has surged aggressively, and now Bitcoin is clearly moving within an ascending channel. At this very moment, we can see how its price is testing the lower boundary of that channel, which usually suggests we're approaching a market extreme. But what really grabs our attention is what's been happening over the last few hours. And this is something we absolutely have to keep in mind if we want to seriously analyze this asset. If we switch over to the 1 hour time frame and zoom in a little, we'll notice something interesting. Just recently, over the past few days, we've been seeing a bullish accumulation process right after a massive bearish climactic move, and the volume behind that move was enormous. But here's the key, that volume was completely absorbed, no question about it. This bullish accumulation process hit its target, and what really stands out is what happened right after. Once that target was reached, within what we'd call a complex corrective pattern coming off this bearish impulse, where we can clearly label a W, a weak Y, and a Z, we can see how price action began to reverse. As I mentioned before, this was a one-to-one institutional target search, and now that it's been reached, we're seeing the price start to turn around. And this is definitely something to pay attention to, especially when you consider that Bitcoin recently tested the midline of its ascending channel, but then failed to touch it again. Now it's threatening to form a structural black swan, and we're talking on a very macro level here. This can't be seen in isolation. We have to zoom out and look at the bigger picture. And one key element we need to watch closely is the behavior of traditional markets. Because if we look at a chart of the SP 500, we'll see something fascinating. To the S&P 500, the leading US index printed a clear black swan. It came off a strong bullish rally, and right now we're witnessing a deceleration in the form of a wedge pattern. That wedge is pressing up against a major structure, and that structure is nothing less than the all-time high of the SP 500. But ladies and gentlemen, this is extremely dangerous, and it's not just the SP 500 showing this behavior. The NASDAQ is doing the exact same thing. Just look at how the NASDAQ is printing a black swan right after a major bullish impulse. We're seeing a clear slowdown, once again in the shape of a wedge. And honestly, the entire equities market is crying out for help. And if you take a look at the Dow Jones, which by the way is the most lagging of all the major US indices, you'll see that it's struggling with a key structural level around $43,000. It's like that barrier just refuses to be broken. Now, here's what I'd personally like to see. And keep in mind, tomorrow there's a Fed meeting where they're going to talk about interest rates. I have no idea what they're going to say. And honestly, I don't expect any big surprises, but you never really know. That said, if you're asking me what I'd love to see, it would be a bullish climactic move, a fake out, a trap on the Dow Jones just to set the stage for a proper bearish correction. Not some apocalyptic crash, but a coherent, healthy correction in response to the bullish impulse we've been seeing across the board. And that bearish correction we're talking about, the one that could play out in US indices like the SP 500, could very well come in the form of a climactic move, a trap, something that shakes things up a bit and gives us a brief correction. It's not the end of the world. Maybe we just consume a bit of time, consolidate, and who knows, after that, we could be heading straight toward new all-time highs. So none of this is inherently bad, but during that downward phase in equities, it's very possible that crypto could also experience a similar corrective move. Now, of course, we have to bring gold into the equation. Just look at how gold is trading. We were expecting a breakout, something that would confirm continued upward movement. And if that happened, it would basically suggest that equities are becoming less attractive. And if traditional markets are less appealing, then so is crypto. So if gold rises while crypto and indices fall, what does that mean? Well, on one hand, it looked like gold was ready to break out and take off, but it's struggling. The indices are still nearby, compressing the movement, but we're not quite there yet. And because that movement hasn't fully played out, gold isn't ready to break away either. Honestly, I don't know if it's going to happen, but it's something we absolutely need to monitor. Maybe gold already broke structure just to grab some liquidity before making its move. And once it finds the liquidity it needs, that's when gold could finally break out, right as US indices and crypto start to dip. That's one possible scenario, just a hypothesis. But now I want to know what you think. Do you believe we're about to see a depreciation in US indices, a breakout in gold, and all of that leading to a broader correction in crypto, or do you see it the other way around? Let me know in the comments, and if you're finding this advanced technical analysis helpful, hit the like button, subscribe to the channel, and tap the notification bell so YouTube can let you know when we post something new. Now that we've broken down all of that, let's go back to the Bitcoin chart. Like I mentioned earlier, it's really striking that we touched the midline, and on the next attempt to reach it again, we've got a gap, which is a clear sign of weakening buying pressure. Buyers are starting to lose momentum here, and that alone could support the idea that Bitcoin might come down to test the $1,600 level. Look, this isn't the end of the world. I mean, sure, if they want to, they can definitely generate the feeling of a massive crash here, but that kind of extreme move could actually create the perfect spot for entering long positions in Bitcoin. It might be the lowest point before Bitcoin and the broader equities market resumes its upward trend. At the end of the day, here at Crypto Insight, we're bullish on both stocks and crypto. We're just saying that a minor correction might be on the horizon for equities, and we'll see how shallow or deep that correction ends up being for Bitcoin in the crypto space. But it's something we have to keep on the table. It's exactly what I just told the Crypto Insight Premium members in a live session just a few minutes ago. We dove into some wild time frames, even down to M3, and I told them straight up it would be risky, maybe even reckless, to try to play the hero and buy right here. Yes, our philosophy of hunting market extremes tells us this could be one of those extremes. And sure, it might make sense to look for a long, but let's be real. That's like standing in front of a high-speed train going 300 kilometers per hour and thinking you can stop it with one hand. That's the kind of force we're dealing with right now. I don't think it's very prudent in this context to try playing the market magician, acting like the smartest person in class and trying to pinpoint the exact moment when prices will stop crashing. Like I said, yes, we're at an extreme. Anyone can see that. However, given Bitcoin's and crypto's momentum, plus that gap we just witnessed, it makes sense to expect further declines. Always keeping one eye on the SP 500, of course. Now, take a look at the daily chart of Ethereum. You can see that around the $2,833 level, we've identified a very important structure. After a significant black swan event within a bullish accumulation process, a strong impulse was born, and that impulse has been riding an extremely volatile ascending channel. That channel has already produced an impressive trap, one that some sharp members of the Crypto Insight community were able to capture. I'm talking about that short position because without a doubt it represents a market extreme, similar to what we're seeing now in Ethereum and Bitcoin. Look at how we're inside a macro bullish channel for Ethereum, coming off a massive macro uptrend that really deserves our full attention. We've had a powerful bullish impulse that then went a bit sideways, generating loads of volatility and momentum that made it feel like we'd conquered the world. We hit a key zone, and just look at the reaction that followed. That reaction is pure gold. From there, we swiftly moved into a smaller time frame and into what's clearly a complex corrective pattern. Here's the bearish impulse, and here's the corrective wave. There's the W, the weak Y, and that's Z. And just like with Bitcoin, we can see this is a bullish accumulation process that has hit its one-to-one target, and now it's turning back down. That move alone is a bold statement of market intent. Right now, we're watching price hammer against that key structure, but remember our overall stance. We're still bullish on crypto and equities. We do think a bearish attack could come, maybe to a hunted defensive zone. If price breaks, it's not necessarily the end of the world. At worst, it could be a trap designed to set up a stronger rebound, after which we can remain bullish. Honestly, I'd love to see this macro cleanup where the big institutions shake off the smaller long position traders. If an institution wants to stay long, they need to get rid of the little fish who will only make things messy when prices rise. Imagine you're that small fish fully long. When the market goes your way, you get excited and want to close your position. Your market sell order then creates bearish pressure just as the institution is trying to keep pushing higher. And that's a real problem for them. That's precisely why these kinds of cleanups happen. Does that mean this bearish shakeout is guaranteed to occur? Honestly, it's impossible to know. No one can predict exactly what financial markets will do next. What we do see is that this scenario crypto makes a lot of sense. And at the same time, we understand that it's not necessarily the end of the world. It just boils down to using a bit of common sense. Now you're looking at the XRP charts. Check out this macro support zone. They haven't touched it in a while. If I were an institutional player, I'd be asking myself, when do I trigger the shakeout? What am I waiting for? Do I want to clear out these retail traders who are driving me nuts? Maybe I need a climactic move to flush them out and go solo. Look at that downside margin. There's such a key defense level here. Honestly, why is nobody breaking it? Not saying they won't block it again, but you can almost feel the urge to wipe out these small players, right? It's all about putting yourself in the institution's shoes and thinking through the playbook, always within a coherent structure and understanding how big money manipulates markets. And you know what else caught my eye? XLM. XLM has marked a key level here, and it later confirmed that level. We can forgive that initial failure, no problem. It's just a shakeout, perfectly acceptable. It validated the structure, then validated it again and again. Now it's playing with fire, literally knocking on the door to see if it can drop just a bit, generate some fear with a climactic move, and hunt a clean out. That could happen quietly with margin call liquidations nobody even notices, or as a sudden, aggressive black swan event that terrifies retail investors. The other scenario is just as real. If institutional players really want, they could smash through that structure without mercy, trigger a powerful climactic sell-off, wipe everyone out, and move on. Keep a close eye on XLM because it could head lower over the medium term, and don't lose sight of other cryptos like SUI, which are also sitting in a critical zone on their daily chart. And now it's slipping a bit more. Watch out. You see what I mean? Maybe they're setting up a climactic trap within a trap, aiming to revisit the original break level. It's not the end of the world, just another leg down. Think of it as a sneeze that needs to validate before turning back up. As I said, nobody has certainty here. Will price reverse immediately, or will it dip a bit further before turning? It's impossible to know. At Crypto Insight, we stay positive in the long run. We remain bullish given what we see in the equities market, but let's keep it real. MicroStrategy is sending us very interesting signals. We've generated a black swan by breaking out of a bearish channel. That's ideal. Broke the channel. We tested the structure today, and we could test it again. They could even trigger a bearish climactic move in crypto, a trap around this defense zone. It makes sense given MicroStrategy's behavior. At that point, all we can do is hope and pray that this is the final scare before a recovery, and that it brings us to better levels. MicroStrategy's price structure and the behavior of complex corrective patterns tells us a lot. Here, we've seen a bearish impulse followed by a W, a weak Y, and a Z. That Z broke its wedge, then came down to test the Z line of boundary worth its weight in gold. If they want to trap traders there, they could trigger a climactic move. But if price recovers, there's no doubt they'll smash through target 1, maybe even target 2. And watch out, they might get carried away. What do I mean? In the long run, we're bullish on crypto. We simply acknowledge the possibility of a small, mild correction. If it happens, don't panic. That's the message. At the same time, we can't ignore the US indices. They're losing momentum after a huge impulse. It's taking them more and more effort to move higher, and they're headed straight for key structures. This smells bad. By its very nature, it's alarming. At the very least, it's a warning sign. Drop the ego, don't act overconfident, be cautious, and cross-check your information. And hey, maybe in the end, nothing happens. The Fed speaks tomorrow, everything rallies, perfect. We'll be the first to cheer on stocks and crypto. But let's not get cocky. With what we know today, the message is clear. Be alert, watch out, stay careful. Now tell me, what do you think about the financial markets? Do you believe Bitcoin will go up or down? I'm talking short term, of course, but also let me know your thoughts on the long term. Leave your opinion in the comments. If you found this analysis useful, hit like, subscribe to the channel, and tap the notification bell so YouTube lets you know when we post again. Good luck with your trades, and see you next time.